The markets may be closed, but the business stories are just heating up. I'm Robert Tan. Catch up with us on Business Brief. The Philippines plugs $500 million into blue economy. The Asian Development Bank greenlights a policy-based loan to supercharge the country's ocean and maritime projects. The wait is over. The Bangko Sentral ng Pilipinas cuts the interest rates to its lowest in over 3 years. Don't let this go to waste. President Ferdinand Marcos Junior warns future leaders, keep his reforms moving and turn them into lasting gains for Filipinos. The digital job race is on. A new job fair and skills e-hub aimed to train Filipinos and connect them to the tech jobs of tomorrow. Crisis aid allegedly hijacked. DSWD files charges against 14 Iloilo barangay officials accused of pocketing funds meant for families in need. The Philippines is getting a $500 million boost to protect its ocean and build a more resilient, low-carbon blue economy. The Asian Development Bank, or ADB, approves a policy-based loan to strengthen marine ecosystems and support sustainable growth. The program aims to expand the country's ocean-based industries, improve coastal community resilience, and tackle plastic and solid waste pollution. It also supports nature-based solutions and blue carbon ecosystems. Co-financed by the French Agency for Development and the German Development Bank, the initiative builds on ADB's long-standing support for climate action and natural resource management in the Philippines. This funding could open opportunities in sustainable fisheries, aquaculture, and green technologies while helping the Philippines meet climate goals and strengthen its blue economy. The Bangko Sentral ng Pilipinas, or BSP, slashes its key rate to the lowest level in over 3 years, aiming to prop up a slowing economy while keeping inflation in check. The central bank cuts its target reverse repurchasing rate by 25 basis points to 40, the lowest since September 2022. Overnight deposit and lending rates are set at 4% and 5% respectively. BSP officials say inflation remains under control, but domestic economic growth is softening, with business sentiment shaken by governance concerns and global trade uncertainty. They add that monetary easing is nearing its end, and any future adjustment will depend on incoming economic data to ensure price stability and support sustainable growth. The move walks a fine line, keeping borrowing costs low while carefully monitoring risk to the economy. President Ferdinand Marcos Junior is already thinking beyond his own term. He wants the reforms his administration has pushed to keep shaping the Philippines long after he leaves office. In a podcast, Marcos says the structural changes he proposed could take hold if the next leaders are effective. Continuity, he stressed, is key to real progress. This week, he asked Congress to fast-track 4 major bills: the Anti-Dynasty Bill, Independent People's Commission Act, Party List System Reform, and the Cadena Act. All are aimed to boosting transparency and accountability. Marcos also draws a clear line from his father, the late President Marcos Sr. He says his leadership focuses on perseverance, public service, and sacrifices for the nation. These reforms could signal a more stable political climate, clearer governance, and stronger investor confidence, key ingredients for growth and market stability. Meanwhile, the country gears up for a digital workforce revolution. President Ferdinand Marcos Jr. leads the Job Fair Plus Skills e-hub, a bold initiative to train Filipinos and create more jobs for tomorrow's industries. The event features employment boosts and exhibit on digital upskilling and artificial intelligence at the SM Mall of Asia. It brings the private sector together to respond quickly to fast-changing technology and align workforce skills with real economic demands.
lahat ng sektor ng ekonomiya ay kailangan makapaghanap ng kanilang mga manggagawa, kanilang mga magiging empleyado na meron silang natutunan na mga skills training para bagay yung kanilang alam doon sa kanilang magiging trabaho. Kaya't napakahalaga yung ating tinatawag na upskilling.
Marcos says the hub makes job seeking easier and opens more opportunities for Filipinos entering the labor market. The initiative partners with the Private Sector Authority, Department of Labor and Employment, Department of Information and Communications Technology, and SM Supermalls. This initiative builds a workforce ready for the digital age, bridges skills gaps, and strengthens the Philippines' competitive edge in the global economy. Shock and outrage hit Iloilo City. Cash aid meant for the poorest Filipinos is allegedly stolen by the very officials tasked to help them. The Department of Social Welfare and Development files administrative charges against 14 barangay officials. Recipients of the 10,000 peso payout reportedly give back 8,000 to 9,000 pesos just to remain on a supposed beneficiary list. Secretary Rex Gatchalian urges the public to report corrupt officials, stressing that aid must go directly to those who truly need it. This case underscores the importance of transparency in government programs, ensuring funds reach intended recipients, build trust, and support social and economic stability. Falling inflation may feel like good news, but it comes with a warning. Inflation in the Philippines has dropped to 1.5%, well below the Marcos government's target. While this eases the cost of living, analysts caution it could signal trouble for foreign investors. Renzo de Guzman of Lichu Property Consultants say the low inflation rate may point to sluggish consumer demand amid a cautious investment climate. The Bangko Sentral ng Pilipinas targets 2 to 4% inflation, a range that supports healthy economic activity and business growth. Meanwhile, foreign direct investments fell 20% to $5.2 billion in the first 8 months of 2025 compared with last year. De Guzman says government action is needed to boost high-value sectors and reduce regulatory hurdles to restore investor confidence. Low inflation helps consumers, but without stronger investment and regulatory reforms, the economy could face slower growth and weaker market confidence. Political controversies are rocking the Philippines, but the property market is holding its ground. Residential and tourism segments are feeling the pressure, yet the office market and high-end condos continue to show resilience. Paolo Barcelon breaks down the numbers in this report.
Demand for office spaces grew in 2025. According to Lichu Property and Report, more than 1.22 million square meters were taken up this year, and nearly half of that came from the IT BPM industry. According to Lichu Commercial Leasing Director Miko Baranda, this is proof of the industry's renewed strength, despite issues affecting the property sector, such as President Marcos' POGO ban, which impacted office demand.
This is not a small number. It still makes the Philippines one of the largest in terms of volume. It's a 10% increase year on year compared to 2024. So overall, we've seen growth continue on, not just this year, but even in the past 6 years.
But new condo launches and demand have dropped. Units sold decreased by 3%, while newly launched units fell by 60%. According to Lichu, this is due to fewer buyers entering the condo market, while developers are currently focusing sales in the secondary market. The luxury, upscale, and upper-middle income condo segments carried the market in 2025. And according to Lichu, these segments seem unaffected by political noise, including wealth-related controversies stemming from the flood control scandal.
I think even if you look at the residential spectrum, many of the developers now are there actually pivoting. They're from many of the developers that are known for non-high-end products are now starting to introduce more of that in the market. And in the past few years, that's where really the amount of growth we've seen.
On land sales, emerging urban centers outside Metro Manila are on a roll this year. In Cavite and Laguna, land values per square meter are rising due to the development of residential townships that will be accessible through major infrastructure projects, such as the Cavite-Laguna Expressway or CALAX, SLEX TR4, the LRT1 Cavite Extension, and the Cavite-Batangas Expressway. Despite storms and flooding in Bulacan and Pampanga, these areas are seen as prime investment corridors, especially with their proximity to Clark International Airport and San Miguel Corporation's New Manila International Airport project of Bilyonaryo Ramon Ang. And because of successive floods, earthquakes, and exposés on substandard flood control projects, developers and office leasers are becoming more conscious of how these affect their operations and construction.
Developers and as well as occupiers are now more conscious when either in what they build or where they end up leasing space. And I think that is a reflection also not just of what the current flood control projects are, but really what the market is looking for is more sustainable products.
Meanwhile, Lichu expects the tourism sector to strengthen in 2026, especially with more than 12,000 new hotel rooms opening next year. But the government must immediately address accessibility issues to make travel between major tourism hubs more seamless.
We can't operate a tourism industry with that is seeking intra-Asia travel on the basis that you need to travel 9 to 10 hours to get anywhere in this country. And so that's something that we need to solve over the next 3 to 5 years to really open that industry up.
Despite this, the new international flight routes of Philippine Airlines and Cebu Pacific, upgrades to Iloilo and Davao airports, the expanded tourism promotions budget of 1 billion pesos in 2026, the growth of meetings, incentives, conventions and exhibitions or MICE tourism, and the expanding hotel supply are all seen to boost the country's tourism industry, especially as the Philippines hosts the ASEAN Summit next year. Paulo Barcelon, Bilyonaryo News Channel.
We're taking a short break. Stick around. We've got more stories ahead. You're watching Business Brief. Tennis star Alex Ayala steals the spotlight, leading the Philippine contingent at the 2025 Southeast Asian Games opening ceremony. She joins volleyball standout Brian Bagu carrying the Philippine flag together, creating an unforgettable moment for the nation's top athletes. Ayala shares a heartfelt message on Instagram alongside photos of the pair. She writes, "Isang karangalang panghabang buhay, thanking everyone for the trust to represent the country." The SEA Games features the Philippines' largest contingent yet, 1,600 athletes and staff ready to showcase their skills and raise the country's regional profile. This participation highlights the Philippines' sports development programs and boosts its visibility in Southeast Asia. Filipinos are angry over corruption scandals, but most hesitate to protest. A global advisory firm says many doubt that mass action brings real political change. On Business 360, Teneo Managing Director Bob Herrera Lim says even frustrated middle-class citizens fear that destabilizing the administration makes things worse. He adds that some worry a political shakeup empowers groups or leaders they see as even bigger risk.
There is, for many middle-class Filipinos, especially in Metro Manila, a sort of higher level of apprehension or fear that if Marcos is attacked directly, the administration will be destabilized. And if this administration is destabilized, you get the worst outcome in their minds. I'm not saying it is the worst outcome, but one of these is either there is a military takeover, which I think is a low probability, or for them, it strengthens the hand of Vice President Sara Duterte.
For many, the threat of unintended consequences outweighs the chance for meaningful reform. International Container Terminal Services Incorporated, or ICTSI, the world's largest independent terminal operator, is setting its sights on South Africa, appointing new leaders to take its Durban operations to the next level. Executive Vice President Christian Gonzalez announces Javier Lancha as CEO of the Durban Gateway Terminal and Donovan Bob as CFO. The company takes over South Africa's largest container terminal in January 2026, aiming to turn it into a globally recognized trade hub. Gonzalez says ICTSI will maximize the terminal's potential and boost South Africa's connectivity to international markets. The move strengthens ICTSI's global footprint and could drive faster trade flows and economic opportunities across Africa and beyond. A $14.9 billion claim against Malaysia has been thrown out by a French court, ending a decades-long legal battle with the descendants of the former Sultan of Sulu. The Paris Court of Appeals annulled the 2022 arbitration award, ruling the arbitrator had no jurisdiction and ordered the claimants to pay $233,000 in legal costs. The dispute dates back to a colonial-era lease agreement. Malaysia stopped annual payments in 2013 after an armed incursion in Sabah, sparking the legal fight. The decision resolves a major international claim, removing years of uncertainty for businesses and investors in Sabah and reinforcing regional stability. Meanwhile, survivors of Typhoon Odette have filed a lawsuit in the UK against British oil giant Shell, seeking compensation for climate-related damage, according to 3 non-governmental organizations. The lawsuit, filed by British law firm Housefeld on behalf of 103 survivors, claimed that Shell's carbon emissions contributed to climate change, worsening the impact of Typhoon Odette on vulnerable communities. The case is part of a growing international effort to hold major corporations accountable for climate change, particularly in Global South. A Shell spokesperson dismissed the claim, saying this is a baseless claim and it will not help tackle climate change or reduce emissions. Meanwhile, advocacy groups say the lawsuit is a vital step in challenging the impunity of fossil fuel companies worldwide. The lawsuit underscores the public clamor for accountability on climate-related impacts, highlighting the rising legal and reputational risks for global corporations. Suppliers are fuming as All Home, owned by Manny Villar, drags its feet on payments, sometimes handing out farmlands or gift certificates instead of cash. Vendors report waiting over 200 days to get paid. Meanwhile, sales have dropped 28% to 5.6 billion pesos and net losses hit 36.5 million pesos. All Home struggles with high fixed costs, debt, and a sluggish property market, leaving cash flow tight. Delayed payments threaten operations and highlight the risks suppliers face when major retailers run tight on cash. We're taking another short break. Up next at Close Today, that and more when Business Brief returns. Stay with us. Asian shares are mostly lower after the U.S. stock market nearly hit a record high following the Federal Reserve's cut to its main interest rate. Singapore's Straits Times and Australia's ASX 200 trade higher, while Nikkei, Hang Seng, Kospi, and Shanghai Composite remain lower. The U.S. dollar strengthens against the Singapore dollar and South Korean won, while the Australian dollar weakens versus the greenback. The U.S. dollar also weakens against the Japanese yen and holds steady against the Hong Kong dollar. Gold trades higher by almost 0.4%, while oil prices are lower. In crypto, Bitcoin drops more than 2% and Ethereum falls nearly 4%. Philippine shares end in the positive territory as the Bangko Sentral ng Pilipinas cut the interest rates by 25 basis points. The PSEI closed 0.5% higher to 59.90. Majority of the sectoral indices gained, with financial rising the most at more than 1%. But decliners narrowly outpaced advancers 103 to 100, with value turnover at 7.1 billion pesos. The day's most active stocks were mixed, with ASEAN Corporation rising the most at nearly 12%. SM Prime Holdings fell the most at almost 4%. And on currencies, the peso is currently trading at 59.11 against the US dollar, up from the previous close of 59.21. Digital gaming is surging in the Philippines, and regulators are moving quickly to keep players safe. The Philippine Amusement and Gaming Corporation, or PAGCOR, is tightening rules as online activity spikes. Revenue has dipped slightly as operators and players adjust to new payment controls. PAGCOR's new safeguards include delinking e-wallets from gaming accounts, banning credit cards and cryptocurrencies, and requiring tools like self-exclusion and betting limits. These measures are designed to protect players, promote responsible gaming, and support more sustainable growth for the industry. Nearly 500 women behind bars in Quezon City just received a gift of hope. Soler North, led by Enrique Razon, donated essential items to help improve their daily lives. Volunteers distributed grocery packs, hygiene kits, toiletries, and other basic necessities. City jail wardens praised the initiative, saying it helps build stronger ties between the community and correctional institutions. ZTE could be hit with a $1 billion U.S. penalty over bribery claims, sending shockwaves through global markets. The U.S. Justice Department is investigating the Chinese telecom giant for alleged violations of the Foreign Corrupt Practices Act, covering contracts in South America and other regions. Any fines could be tied to profits from these shady deals. ZTE shares tumbled sharply after the news broke, and settlement still needs China's government approval, leaving investors on edge. This is a wake-up call. Cross-border deals now come with higher compliance risks, and firms in telco, tech, and infrastructure must tread carefully to avoid regulatory and reputational fallout. The U.S. dollar tumbles as the Federal Reserve surprises investors. Traders are betting on 2 more rate cuts next year after a less aggressive outlook than expected. The Fed cut rates by 25 basis points as expected, but remarks from Chair Jerome Powell caught some off guard, signaling a softer tone than many had anticipated. Against a basket of currencies, the dollar fell to its lowest level since October 21, hitting 98.543. And that's a wrap for today's Business Brief. I'm Robert San. Join us again tomorrow for the stories that help you plan your next big, bold business moves. Only here on BNC, the Bilyonaryo News Channel.